Hi, and welcome to another edition of the McAnulty Method, where financial expert Frank McAnulty is going to share his insights and knowledge with us so that we might live a happier and more prosperous financial life. Frank, good to see you.
Bill, good to see you too. It's been a week or two since we've done this, but it's summer, so we got to get out and do some fun things.
That's right. It's nice to see that you've gotten outside. I'm looking at the beautiful hills behind you.
Yes.
Today, Frank, we discussed it, but we want to talk about insurance. I know, everybody's favorite topic. I think nobody likes to talk about insurance, I don't think, but we need it. And I read an article that said there are 4 kinds of insurance that everyone should have. And this article listed, strangely enough, well, not that strange, but health insurance, life insurance, car insurance, and long-term disability. Now, so my first question is, it seems like something's missing.
It is. What about renters if you rent an apartment, or homeowners insurance if you own your home? Yeah, everybody lives somewhere. And as you grow older, you get more stuff, and you got to protect your stuff. And even newer apartment buildings, newer apartment complexes require now that you have renters insurance. Just in case you do something bad that damages the building, they want to have something to go after. So you're right. It should be 5.
All right. Well, let's looking at the 5. You've made a great case already for homeowners and renters insurance. Let's start with, we might as well start with the big one, health insurance.
Well, I'd rather start with auto.
Okay.
In chronological order of what people usually have to get, right?
That makes sense.
The first insurance any of us ever got was auto insurance, because the day we turned 16, we were at the DMV getting our license. And if we'd saved our money, we probably went out and bought a really cheap car, and we needed insurance. Now, 2 things about insurance. One, it's a very weird product in that you buy insurance. You may buy insurance from your time you're 16 until you're 106. So for 90 years, and you hope to never use your insurance. Ever. Because that insurance, if you use your insurance, that means something went bad. Something bad happened. You want to buy car insurance. Well, you theoretically, legally have to buy car insurance in California, but you should buy car insurance. But you never want to use it.
Boy, when you put it like that, it sounds like quite a racket.
Well, and that's one of the reasons people hate or dislike insurance, because it's like, I've paid all this money in for 10, 20, 30, 40 years, and they've never got anything out of it. Well, you're right. But that's the purpose behind insurance. You're insuring what's a normal car cost nowadays? A $30,000 car against total loss for $500, $600, $700 a year. So, and that brings to the second point of insurance. Not everybody needs insurance. It's you buy insurance to protect yourself from losses that you cannot afford.
Okay.
In the case of auto insurance, you have to buy liability coverage. It's the law. We won't get into whether or not the limits are too low or too high. They're ridiculously low. But if you have enough money and you go out and you plunk down, you write a check for your new, Porsche that costs $90,000, If I wreck it, I'll buy another one in a different color. You don't need insurance on your car. You still need liability insurance in case you accidentally hit somebody else. But if you can afford the loss of that car, you don't need insurance. Because let's face it, the insurance companies write their policies based on the fact that they're going to have so many losses per year. They add all those up, they add in a little profit, they put their overhead on top of it, and that's how they come up with what they're going to charge you for the insurance. So the odds are, based on the odds of you getting in a wreck and totaling your car, you're losing money. But most of us can't afford to buy a new car, go out, wrap it around a tree and go, well, heck, I didn't like that color anyways, I'll get another one. Now, my example is Bill Gates does not need insurance.
There you go.
What's he need insurance for? Oh, my house burned down. Well, let's see, which pocket should I pull the money out of to just buy a new one while I'm in my other 6 homes while this one's getting fixed? So really the whole purpose of insurance is to protect you from losses you can't afford to have. Bill, think back to when we had our first cars. I don't know about you, but I didn't pay a whole lot for that car. And yes, that $300 car would have been a bad situation if it got totaled, but it was like, okay, should I pay $25, $50 a year to cover the car? Or should I take my chances that, it won't get wrecked? Oh, right?
There you go.
And a lot of times we couldn't afford any more than just the liability insurance. So we get the minimum, we comply with the law, and we'd be happy. Because let's face it, if, God forbid, we accidentally hit somebody and they were injured and it's $100,000 in medical bills, we had nothing that they could take. So really the purpose of insurance is protecting yourself from a loss you can't afford. And that includes people suing you. So what insurance you need, auto insurance you need, changes over time.
There you go.
That's a long-winded answer on auto insurance.
All right. Well, what's next? What do you think? What's the next insurance we all get?
I think I'm going to go with renters insurance, which then morphs into homeowners insurance. Like I said, it used to be no one ever bought renters insurance. No one's going to break in and steal my stuff. And for the most part, that was true. Fortunately, we do live in a country where robberies of people's houses are fairly rare, which is why renters insurance is in many ways remarkably cheap. I don't know what it is. It's $150 a year to cover your contents, give you $100,000 worth of liability insurance in case something happens when you're living in your rental unit. And so once again, it's cheap, granted. After 50 years, it adds up if you never use it, but it gives you peace of mind. And some people need that. And like I said, more and more apartment owners require people to have renters insurance because they've been burned where they've had renters and, say just have an accident in the kitchen and kitchen catches fire. Actually had that discussion at dinner last night when somebody was reminding us where this happened in their kitchen. And Bill, you know them, but we won't name names here. But, and that happens in apartments. And so apartment owners say, look, I know most of my renters really don't have any money, but they can get this cheap insurance to help cover me in case something goes wrong. And so I'd say that's the renter's insurance. And then everybody's goal, let's buy a house.
And it's funny because the banks are a lot like those apartment owners. They say, hey, look, until you can actually pay us off, we want to make sure that we're covered.
Right. The bank has put a loan on your property. And if the house burns down, which happens very rarely, the bank loses its collateral. Banks don't like it. Banks' whole sole reason for being is to get paid back their money with interest. And so you have to get insurance on your house when you buy one with a mortgage. Like I said, if you're Bill Gates and you wrote a check out of petty cash for your house, why pay the insurance company to cover it when you can cover it yourself? You can self-insure. But since none of us are Bill Gates, and I'm pretty sure he's not listening, we're all going to need homeowners insurance. Now, this is one where, even more than auto insurance, it's like you really hope you never use it. You don't want anybody to break into your house. You don't want your house to burn down. You don't want there to be a major problem. But where homeowners insurance is really handy is the liability coverage that comes with it. Because people get hurt and they like to sue. And if somebody comes into your house and gets hurt, you're responsible for covering it, which is why you have homeowners insurance. And even homeowners insurance, because once again, things don't happen that often. There's not that many claims in a normal neighborhood. We're not talking about, in the woods, like behind me there in the picture. Houses rarely burn. They're built much better than they used to be. They rarely burn. There's actually the biggest problems with homes are plumbing leaks and somebody getting hurt in your house. So that's why you have homeowners insurance. The thing people don't understand is with most insurance, you don't win, if you want to think of it that way, unless something really bad happens. So, as you know, Bill, my sister's house burnt completely to the ground. She showed up at my house with her son, her dog, and a box of papers. That was it. So, some people, and the insurance company did an excellent job. They paid her all her coverages. She'd done a good job of every year getting with the insurance company and making sure she had the right coverage. That's a really important thing because things change. Your value of your house goes up. You may do things, you may redo the interior, add some really expensive stuff. You want to make sure your insurance is kept up to date every year. So for Mary, it worked really well. Insurance was her savior because she could not afford to have her house burnt down. Most of us can't.
No,
so what's next?
I have to agree with you. Well, you tell me. So we've got a car, we got our car insurance. We got a place to live, so we have either our renter's insurance or possibly our homeowner's insurance. I don't know. Call me crazy. I think maybe health is next.
Yeah, I'd go with health as well because most of the students we're talking to can stay on their parents' policy until they're 26, which is good. But once you hit 26, you need health insurance. And I know that the thing is, I'm not going to get sick. I'm young. Nothing happens to me. You're right. 99% of the time, you're absolutely right. But you like to go skiing, you like to go surfing, skateboarding, whatever. The beauty of it is, once again, insurance is based on the potential of the claims they're going to have to pay out. And so if you're really young, insurance is really cheap. And yes, you might, same thing. Well, I pay insurance every month, but I just don't get sick. You're right. And this is one of the, Well, theoretically, you were required to have health insurance. I'm not even sure where that stands anymore with the whole health insurance requirement because
I know that it's like you have to have it, but then if you don't have it, well, we'll give you this or that. Yeah, who knows exactly? And I'm sure it varies from state to state. I did see an interesting thing. The American Journal of Public Health said that statistically, every family is just one serious illness away from bankruptcy. So that made me think, yeah, boy, I'm glad
I
I
don't
have
know,
it.
see that all the time. And the biggest cause of financial stress in the average American family is health bills. So yes, health coverage, health activity, extremely expensive. So, you know, I have a lot of insurance. I've always had a lot of insurance because I don't want to think about it. It makes me feel comfortable. Yeah.
You know what? I think, I can't remember who said it to me once, but at some point, we were just having that discussion you were just, talking about where it seems like a waste of money. You never use it. He goes, well, that's the goal. He says, I think about it this way. I'm buying peace of mind.
Right.
So I don't have to worry about it.
That's all. I think that was somebody's slogan at one time. Yeah. Because, but yeah, it's so even if you're young and you think nothing can happen, but one broken leg, one broken arm, one who knows what. You get in a car wreck and you're hit by somebody without insurance, which 33% of the people in California don't have insurance. So they should. All of a sudden that bill's on you. It's so yeah, health insurance is, I think you're right, the third most important, and depending on your age, could be the most important insurance to have.
Let's talk about the last thing that I saw in this article: long-term disability.
Well, once again, long-term disability is one of those things. They all have statistics that this percentage of people end up in an old folks home for at least 6 months, and it's very expensive. You're right. But once again, this comes back to, and I've heard this talked about, that for most people, if you're really poor, you don't need it because there's Medicaid. They'll give you long-term care coverage if you need it. May not be in the best place, may not be the best, coverage, but you get it for free if you're poor. If you're rich, once again, who cares? And this is the difference. You don't have to be Bill Gates rich. You just have to get to the point where you're comfortable, have a decent amount of money in the bank, have decent investments. Because most people, once again, most people end up in long-term care for about 6 months. So let's say it's, the best long-term care place on earth is $20,000 a month. I'm just making a number up here. Well, that's $120,000. Okay. If you've got $1 million in the bank, maybe you don't need to spend the money on long-term care coverage. But if you're that middle class that's always getting hammered on, and you feel more comfortable, once again, it's a comfort thing, knowing that you've got a portion of it covered, and get it. Once again, if you buy long-term care insurance in your 20s, it's going to be really cheap. And if you get the right policy, the premium never goes up because they're getting it from you for the next 40 years.
Yeah.
Or 50 years. And so once again, it could be as low as $50 to $100 a month in premium to pay now to have really good long-term care when you reach, your 60s. So if you have the extra money and you feel that, once again, it comes down to what's going to make you comfortable, what's going to make you feel good. You don't have to worry. It might
There
be
you go.
something that it's always worth looking into. But once this is one of those things that's really one of those coverages that starts getting tricky because there's all sorts of nuances that companies put on them to make them cheaper or make it think like you're getting better. So that's when you really need to go to somebody you trust and that will help you get the right policy to make you feel good.
All right. Well, that's good advice. I guess at this point, what haven't we touched on? What do you want to tell us about, Frank?
Life insurance.
Oh, there you go.
You know,
I guess I forgot about it because I won't be spending it if I'm cashing in my policy.
you know, once again, it's one of those things. If you look at the mortality tables of people, the average 20-something has, this little chance of dying, little teeny chance. So if you want to get life insurance young, really cheap, the premium never changes and you get coverage for life. Now, life insurance can be remarkably complicated. Most of my life, be honest, my whole life, I've just had term insurance, which means that all you're doing is you're buying insurance for a term. The next 20 years, the next 10 years, the next 30 years. They've actually come out with 30-year terms now. Granted, somebody in their 20s can probably buy a 30-year term insurance policy, and it's going to be a lot cheaper than a whole life, which I'll explain later. It adds value, builds cash value that you have. But the problem with term insurance, you buy your term insurance when you're 25, get a 30-year policy when you're 55. You haven't died, fortunately, you no longer have insurance. And now you're trying to get insurance as a 55-year-old. Well, once again, life insurance is one of those things it's definitely, you take out life insurance, it's not going to do you any good, right? In order to collect, you've got to die. So once again, what are you trying to protect with the insurance? Okay, you've gotten married. You're the major breadwinner in the family. Okay, how much money do you want to leave your spouse, your partner? So everything's personalized, everything's different. You start to have kids. Oh, now that's another whole dimension. Okay, part of the thinking is, okay, how long are the kids going to be around? You're 30, you have 2 or 3 kids right in a row. Well, you're hoping they'll all be out of the house by the time you're 60. Yeah.
Yeah, no, that's right.
As we know, it doesn't always work that way, but that's our hope. And so once again, do you want to get a 30-year term policies when the kids are born? So you have insurance throughout their life, extra insurance to cover them in case something happens to you, so you can get them to do college, this, that, the other thing. Life insurance is, once again, very, very personal. It's not like car insurance. Well, I got to get minimum liability coverage, sell it to them. Everybody has different life insurance requirements. Now, once again, whole life insurance, which costs more, and it has a savings aspect to it. It builds cash value. And we don't have enough time today to go into the whole thing. All of a sudden, it starts getting into a whole realm where things get a lot more complicated. There's a lot of pluses, there's some minuses, but I'll be honest, one thing that you can do if you buy a smaller whole life policy when you're young, it'll be cheap. You can build cash value, and the policy never goes away. So you always have it. So I'm looking back. Now, my suggestion to people would be when you're young, if you can afford it, see how much it would cost for you to buy a 200,000, 300,000, maybe in a 500,000 whole life policy in your early 20s. Put the money away, build up value. It never goes away. So that money will always be there for you as long as you keep paying your premium. That's the problem. You always got to pay the premium. And then when you need more insurance because you've had kids, life changes, add term policies on top of that because they're a lot cheaper. And quite honestly, why spend all of your money on life insurance just to leave it when you're dead?
There you go.
You know, so yeah, auto insurance, probably the simplest. What do I have to have? What do I need to cover? Renters, homeowners, probably second. Health, you just need health insurance. Eventually you need it. You got to have it. Long-term disability, I think that's more of a toss-up in life. Once again, depends on your circumstances. If you say, I'm never going to get married, I'm never going to have kids, I'm not going to do it, then you don't need life insurance. What do you need life insurance for?
Right.
Now, life insurance is to protect those you leave behind. You look at what the insurance is for. Just trust me, the insurance companies will sell you as much insurance as they can, whether you need it or not. It's
I guess
I don't want to talk bad about them, but their job is to make money, and they can always justify why you need more coverage.
That's right. They're not wrong. It's a dangerous world out there. And I think if you're paying people in case something bad happens, if you're laying out money, chances are nothing bad will ever happen.
That's that old karma argument. You say, I don't need insurance. I'm going to let it cancel. Oh, next week, that's what happens. And I'll give you an example. There's been basically 3 times in my life where I rented a car and I didn't get the car rent, the coverage on the car to protect the rental car. 3 times the car got totaled.
Wow.
Never my fault. But it's like, it's one of those things. I know it's expensive. I know it's a waste of money. But now, most of the time, especially, just cover the car. I don't want to deal with it. It's somehow got my number.
All right. Well, Frank, thanks for the nice insurance lesson here. And any idea about what you want to touch on next?
Well, why don't we? Since before this started, I was sort of ranting about something. Why don't we talk about mortgages?
All right.
We'll talk about mortgages, and I want to talk to the audience about protecting their family, their parents or grandparents when it comes to reverse mortgages. Because I learned some very disturbing information last week about some of these companies that sell reverse mortgages.
All right. Well, you know what? We'll leave it there. It's sort of a cliffhanger, and our viewers can watch that and then try and save their parents from doing something terrible.
Sounds good.
All right. Well, thank you, Frank.
Thank you. See you later.
Bye.